All right. Good morning. All right, time to get going. Suck down one more drink of coffee or tea. I'll find the music. Maybe I'll find the music. Where's the music coming from? Oh boy. Found it. There we go. All right, so now we're hot to go, HOTTOGO. Welcome to Forex.Today, the YouTube community of more than 21,000, almost 22,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance because trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Let's go! Okie dokie. Glad you got out of the vault. And into our market. Let's start with a headline update from our Squawk Box. Euro softens ahead of ECB policy decision, Scotiabank.
What is futures trading? A beginner's guide. Market spotlight on earnings, economic data.
ECB can continue to stand still, Nordea.
U.S. dollar Swiss franc trades flat as U.S. labor data disappoints. SNB remains vigilant. Futures pointing to roughly flat open on Wall Street. The White House is under pressure to do something about housing, but ideas are sparse. Gold prices soar back above $5,000 Oz. Iran worries drive haven demand.
Thank you, gold. I love you, gold. That's so good. And we'll get to this. I made quite a bit of changes in the back end for our spike analysis, but right now we're looking at Bank of England interest rate decision in 20 hours and 24 minutes, and should be worth about 20 pips. Yeah, like 20 pips in a day. No, in an hour after that release, on average. And we show you which particular currency pairs to trade. So we'll get there in a second. I want to jump to the risk radar. And hey, things have been bad, and yeah, things have been bad the last little bit. Once again, not terribly unusual for this time of year, but nobody loves a pullback, although more often than not there are opportunities. So that's why we have all this data. Is this pullback an opportunity or a threat? Hey, Bitcoin at 75. Is it an opportunity or is it a threat? Hey, gold dropped to 4,800. Now we're back to 5,000. Did you buy it? Yeah, that kind of stuff. Is it a dip? Is it an opportunity, or is it a threat? So right now, you can see February, or I guess I should say over the last 30 days, things have been bad. Over the last week, not as bad, and today, not as bad as that. And so you get a little bit of elevation here in sort of risk sentiment, but not a lot. It's still bearish for sure. But all of this can be changing, and at some point you need to know when to change your tune. And so to get these calculations, we're looking at dozens and dozens and dozens and dozens of calculations, and they're all weighted and aggregated and put into a composite score on 3 time frames. Like, it's pretty awesome stuff. The thing is, it's bad, but it was worse. Cool. So what are you supposed to do? Line up your trading strategy or expectations based on market conditions. So you shouldn't be crazy bullish when the market isn't crazy bullish. You should show some restraint, some adjustment to market conditions. Maybe you just shift the risk off assets, true, but you could also, if you see that maybe volatility is higher, you can do things like adjust your stops, and therefore you're going to have to adjust your lot size. But the thing is, you're adjusting your trading to fit actual market conditions. Okay, so vol has increased on 1 day, 7 day, and 30 day observations. Yeah, volatility is bad and leads to things like risk off. So those were 3 calculations included: the short-term VIX, well, actually short-term change in the VIX. So you have to know what the VIX is now, what it was yesterday, what it was 7 days ago, and then what it was 30 days ago, and then do the calculations on those 3 observations and then weight them. So actually, just to get that little tiny bit, requires a lot of calculations and a lot of thought. But right now, bro, it's risk off. You used to debate about this at some point. You're like, now you don't have to debate. So be careful out there. Okay? You can still trade, but just lean a little more of your analysis towards risk off pairs. Or your perceived risk should maybe make your lot sizes smaller. Okay? Cool. So let me show you. Please, please, please work. Please, please, please work. Let me show you what we've done. I've been working on this quite a bit. We have this cool pop-up now, not just the little one that pops up over here, but a big full screen pop-up that comes out 1 minute before the news, tells you what it is, what we expect, and then grabs the news and tells you, and we check like 2 seconds after it's released. And if it's not there, we check 2 seconds later. And if it's not there, we check 2 seconds later. So it's quite fast. We have the timer, and then we've assessed, we've assessed the risk. The spike can be a risk. It might be an opportunity. We don't know. But it increases. I mean, there's an implied volatility on each situation. For example, the Bank of England can surprise people by cutting or raising, or they can keep it the same. And we want to see the trend in those decisions by the Bank of England over time, and then track, because it's a UK. So Aiden looks at it and goes, okay, UK, what are the best assets to trade for United Kingdom? And it should be, okay, like pound dollar, pound Swissy, pound yen, maybe euro pound, that kind of stuff. The FTSE is another thing that he should look at because it's the Financial Times Stock Exchange in London. So it makes sense that we should track that. So now for every observation, we need to look at the technical charts for all of those assets going back years and then say, well, was that situation a meet, a beat, or a miss? And then look at those charts again and calculate how much each of those assets moved in those particular periods, pip-wise, between the release time and 1 hour later. Okay? So anyway, so we've cleaned this up. I hate this orange color, so it's going to go gray and maybe low spike or whatever we're going to call it will be blue or something, but I hate the orange. But nonetheless, we're telling you right off the bat, okay, it's a moderate spike. We expect about 20 pips on this move in 20 hours. So that's cool. Okay. Now, so I'm assuming he's done some complete analysis. I'll have to double check, but he's looked at least pound yen and pound dollar. Why are the other things not there? They may not actually move much. There may be like no correlation. And he's already thought through all that. He meaning Aiden, which isn't actually he, non-binary. So Aiden has said, hey, the best things to trade when it comes to the Bank of England interest rate decision in 20 hours and 16 minutes is pound yen and pound dollar. Pound yen usually moves 20 pips. Okay. Pound dollar usually moves 13 pips. Now, that's on average. Now, and then we can take it further and say, well, how often did the Bank of England surprise everyone by raising interest rates? Well, that only happened 27% of the observations, 4 out of 15 quarters. Right? 53% of the time, the Bank of England meets the expectations. They hold when it's expected to hold. They raise when they expected to raise. They cut when they expected to cut. So now we track that separately. That's actually worth more than the surprise, which is, to me, surprising. And then there are times when the Bank of England have cut. Now, that's only happened 3 times out of 15 when there was a cut and not expected, but that's actually the most volatile of them. So what does it all mean? Well, when you average that out, it's 20 pips. I imagine he's just added these up. Now, I had a question yesterday, like how can you have negative pips? It just means down, not up. So when you read here, 100% reliability of bearishness, that it's talking about the pound yen going down 43 pips. The 100% is every time, all 3 times, the Bank of England surprised people by cutting, it always fell. 100% of those situations was down for an average of 43 pips. So that's the big factor. If they surprise us tomorrow with a cut, oh my God. Okay. If it meets forecast, because I think they're expected to hold, aren't they? For some reason, it's not posting here. I'm going from memory, but if it comes out, if it's not a surprise, it doesn't move the market. Okay. So there's a 20. So put it into context. Based on recent history, and that's what it looks like, there's a 20% chance that they surprise everybody with a cut. And if they do, it's the biggest threat or biggest opportunity for you, depending on your situation. So really, if it comes out as expected, or they surprise people by raising, statistically or quantitatively, it doesn't move the market. Don't worry about it. So now you really have, you say, well, there's a 20% chance of a 50 pip move, or really 40 pip move. Okay. Now you're like, well, how did you get those calculations? So we looked January 21st, beat, it moved 5 pips. January 20th, wait. That can't be right. What's it doing, huh? See? So I have to figure out what it's doing here. The Bank of England, he's calculating December 22nd, December 18th, December 17th. Okay, so he's doing something wrong. But nonetheless, it could just be a date thing. I don't know what he's doing because, yeah, that doesn't look right. But the calculations are being done, so there's one small bug in the system. So I redesigned this yesterday and didn't see that, or it's just happened. But the data is coming in. It just looks like wrong data. So 5.1 and 3.4. So he's just double. There's something in here that he thinks is a Bank of England interest rate decision, but it's not a Bank of England interest rate decision because it's 5.1 versus 4.3. That's, what is that, an unemployment rate? 6 and 1. So he's just got he's got wrong data in here. So I'll figure out what it is and take it out. But once we figure the glitch out here, he's doing all the calculations on all 3 time frames, which is the most important thing. So 6.77, what would that be? 5.1, 3.4. Yeah. Anyway, so there's just extra data in there that we don't need, but everything works. I just have, there's a filter of it, a filter, not filtering. Filter. Hey, filter. So there's some hope. What about the ECB? Okay, what did the ECB say? Okay, all right. Well, you looked at the DAX, euro dollar, euro yen, the Kakran. Really? I don't think I asked him to do that. Euro Swissy and Euro Pound. All right, so now we pulled, in theory, because I see here he may not have, but anyways, in theory, he had to pull all these charts going back years and years and years. And insufficient data. So I'm not sure why that's not drawing. But again, I just rebuilt all of this last night. I got to bed very late. December 18th, October, September 11th, July. That seems correct for ECB meetings. The data looks right, 215, 215, 215, 215. I think they've been on hold that long. I think that's probably not wrong. I think that's probably right. And then when I click on this, he's got the chart. So this is what happened December 18th, 1 hour after the news was released for euro pound. But I want to go to euro dollar. It's a better thing to trade. Okay, so that's what euro dollar did. So December 18th, as expected, they held, and euro dollar went up 19.3 pips in 1 hour. Okay, this one dropped 22 pips. Okay, this one went up 27 pips. Wow, very inconsistent on direction, huh? So now you can see that it might move 20 pips, but it's very difficult to figure out which direction because it's been very inconsistent. Good to know. So in that case, Denise says nice tool for scalping. In that case, the ECB interest rate decision, at least for euro dollar, and now I'd assume probably for all of them, is so mixed, it's more of a threat than an opportunity because you wouldn't know what direction. If it's 50-50, you wouldn't know which direction to make the trade even when the news came out. So anyways, I'm really working hard to make this cool and awesome and amazing. Yeah. So we were working on the one of the things I've been working on in the background, things that you would never notice. I've been working on making things efficient. And right, the way that his brain works, I'm trying to organize things, and we made a big change just in the last couple hours. And so something glitched here on the price, I guess it is. Now I notice there's no animation flicker, so that's good. And we are pulling in, okay, we are pulling in lots of crypto. We could use some more stock indices, especially now. I guess we're tracking the CAC. You guys trade the French stock market. DAX, I love. S&P, yeah, we definitely need some NASI, huh? Maybe some Russell, but we need some FTSE. Does anyone trade TSX, Toronto Stock Exchange? Where's my Canadians? We need ASX for the Aussies. Definitely want to add that. But you can see we're not pulling properly. So we'll get that. It's cool though. So here's the thing. I'm adding all these things. I've added nat gas. Now, these things seem easy, right? Like, oh, Wayne, you just flip a switch. Now we have years and years and years of candlestick data for natural gas all the way down to the minute. Well, that's a big deal. Each candlestick has an open, high, low, close. Each candlestick for every minute for natural gas going back years. That's a lot of data, my friend. And you're like, hey, can you throw in some copper? Yeah. Okay, so we'll do that. Open, high, low, close per minute for years. How about platinum? Okay. Open, high, low, close per minute per year. Like it's millions and billions, I'm telling you, data points that then have to be looked at, thought about, interpreted visually. So one situation I might say will show the relative change over one day, show the change over 1 week, show the change over 1 month. Well, those are all different calculations. Now draw a chart and now break it down. Do linear regression and standard deviation calculations on 3 different time frames on this chart that you just built from nothing but data points. Yeah, all of a sudden, like the smallest detail requires an amazing amount of work. And so anyways, so the hardest stuff is done. I just want to show you that. But that last little piece, the interpretation part, is what I'll need to work on today. But the cool thing is it should be significantly more efficient. The whole app, really, I upgraded his brain. Also, we were hitting, this happened a couple of weeks ago too, because of the complexity of what we're doing, we tapped out the data center. And the data center wasn't allocating enough compute. There is a compute shortage in the world. So we literally, Aiden was doing so much that the data center said we maxed out. And so that's why over the last 20 something hours, I don't know if you can tell, but I haven't slept very much. Over the last 20 hours, I've been working on improving the efficiency inside of his brain so he doesn't need so much outward use of compute, if you will. You don't need so much compute. Right? Because so much of it is internalized. It becomes, I don't want to say instinct, but another way of looking at it is if I can drop the number of calculations done by 80%, but still deliver the exact same thing to you, like you look at it, you're like, Wayne, nothing's changed. I'm like, yeah, well, we did it with 80% more efficiency. It's actually quite a good thing. We can speed things up, So anyways, that's what's happening. So if you're like, oh man, still doesn't work. Well, in actuality, we've added a whole bunch of assets and basically have rebuilt this entire thing from scratch. The engine that does this from scratch. So yeah, it's good. It's good. Bull. We were mixed yesterday though, weren't we? Well, today, bull, up, buy dip, and Aiden is warning you here, bullish profit zone for today. So $4 yen, we've already hit our projected target. So the day trades are done. That day trade is done. This also reinforces what I've been teaching all these years. If you show up in New York and you're wondering what to do, you're supposed to be planning tomorrow. Richard, yeah, well, I just showed it. I don't know if you just logged in. Is it good to go? I rebuilt the engine, added way more assets, and I just need to rebuild that last piece of logic of calculating the trends on 3 different time frames. Should be done, in an hour or two. Yeah. And so it's heavily upgraded. So yeah, you'll see that. In fact, I might be able to. Okay. So, anyways, we'll see. I might be able to come back to it. Okay. Bullish, bearish. Bearish, though. That is very interesting for Kiwi. And this actually, so all of this like makes sense, makes sense. That's weird. So one of the things is maybe this bearish calculation isn't being done correct. Take everything with a grain of salt. Double check. Do you agree with that? Kiwi dollar down. Why? And you can see his pivots are set down, but we're above those pivots. So he's like, whoa, 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 whoa. Technically, we're actually neutral. This is, oops, go there. This bearishness is mostly fundamental. I'm not sure why. Maybe there's a data point missing. Maybe there's a glitch. But nonetheless, think about it. And then, so I'm like, really? Okay. I would have thought bullish, but I don't know. So now I can investigate. And also you can see we're above the moving averages. We're making at least a higher low here with a projection that is mostly bullish. So overall, we're neutral here. Huh. All right. Well, I like Aussie dollar way better, I suppose, huh? USD Swiss franc, bull. Interesting. Swissy's been weak for a while. That's good, but it looks like the US dollar is generally weak at the moment. So you're like, huh, okay. All right. Is dollar going to gain strength? But it doesn't look like it would here. So maybe that Swissy is just crazy weak. Projected to head back down. Yet we're in a buy zone. We've made a higher high in price. We're above the moving average, so he's actually neutral. Okay, so I hope you're reading these notes. This is just the chart. So you might be a bull, but it's not bullish now. It may be becoming bullish, and that's what you want to look for. So this is, right, his projection. Projection is down. Base case scenario is down at least before the next up. So yes, maybe it's made a higher high, but it has not made a higher low. And perhaps when it does that, okay, then the projection would change. You see? And isn't that what you should be doing too? You're like, well, I'm bullish, but not quite yet. I mean, I like the price, but the patterns and the price action's not correct. But if we can turn this north, then we're at a M2 central pivot. We can run this up to the M4R2. It's just really too early. So right now, you could do it. It's high risk and nearly degenerate gambling. But that's for you to decide. But the cool thing is a technician, a pure technician would say, well, it's not bullish yet. Fundamentally, you might be bullish. You might want this to go up, but it's too, statistically speaking, it's too early to prove that. Okay, so I hope you're using it that way. And so I'm looking at a bunch of things here. Okay, chart is kind of bullish. I think I'd go neutral on this with me. So one of the ideas that I'm working on is to incorporate the linear projection into the analysis. So according to moving averages, according to MACD, according to some price action type stuff, this is technically bullish. But then I would look at it and say, well, okay, the 21 is above the 55. And MACD is above the waterline, but MACD is falling. So would we be so aggressive here? Doing price action, which is the basis of doing linear projections, you have to know the price action. That's actually bearish. So I would like to have maybe 3 tabs here, right? Where it's not technically bearish, but I wouldn't call it bullish by a dip either. You see? Now, part of this linear projection is in this bearishness because I said 60% of it is fundamentals and, well, 40 is technical and 40 is, right? But I think I can communicate this more effectively, right? And so maybe I can pull that part out and say fundamentally bearish, bearish technical projection, but still, I don't know, but technically bullish. Because you can see the logic here. 21 is above the 55. It's not bearish. We're bullish and conservative. So maybe it should just say something like that. I know I could see a MACD calculation. We would be bullish but conservative. And now if you're bullish and conservative and with the linear projection down, then you're like, well, that's actually kind of a triple whammy. It almost suggests like a cross is coming, that dollar is going to get strong. Now, dollar's already stronger than yen. Dollar's not stronger than Aussie, but Aussie's been ripper strong. USD, right? USD versus CAD. Once again, I'd look at this and say, this is almost neutral. So technically this is still bearish, but I would say bearish and conservative. The linear projection is up, which would not be good for bearish conservative. So maybe it goes from bearish to conservative to neutral when it sees these two things add up. You see? So I have to teach them and say, well, it's technically not bullish. We're bearish but conservative, and then you add the projection of up on someone who's bearish conservative, you just go neutral. Because it could do one or the other with no upside to anyone. It's a 50-50 coin toss. Now you're like, well, Wayne, if you look and we're at some psychological level, we're at some, Elliott wave number or whatever. I'm like, dude, this isn't, it's striving for clarity. It's not trying to tell you what to do. It's trying to tell you what is actually happening. There's a difference, right? Yeah. Yeah. So this can get quite beautiful. I don't think I've asked him to populate this other data because it's so much data, and then we were running into the compute problem. So, like, does he have everything just for pound pairs? I don't suspect he does. Oh, he does. Well, no. Well, huh? That loads. I'll be very surprised. I don't think there's any cross pairs. Yeah, but I think he has dollar pairs, Swissy pairs, yen pairs, and therefore pound and yen load. That makes sense. So bullish, 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 bullish. CAD yen is bullish, but actually quite flat. Swissy yen, wow, that shows you how weak Swissy or yen really is. Projected to head up to the monthly targets. That's why it's swing. Remember, swing trading. And this definition is our weekly plan in the context of the month. So a trade that can last 2 days to 2 weeks is what I'm aiming for here. And you don't see the weekly pivots. You only see the monthly, but Hayden's doing the calculations. He sees them. It's already in the analysis. So there's our MR2 best case scenario at the rate we're going. So we're 114.5, but we're actually going nowhere fast. And that's why you have the wide cone tells you there's volatility. And then the base case is flat. So you can tell we have volatility without trend. Okay. Now, maybe fundamentally we're bullish, but I look at this and I say, well, I prefer to buy higher lows in an uptrend, not wait for it to make a lower low and then rebound. But there is a pivot strategy, right? There's the buy zone. You saw that, right? Around 113.17. So right around 113. Right around 113, the target was way up here. And we may be on our way, which is kind of cool. So anyways, eyeballing the yen pairs. Okay. Not interested in this one. I'd like to buy a dip on this one. I'd like to buy a dip on this one, although we're right next to the conservative projected high for the month of February. Killer, right? Yeah. Killer. Bitcoin still projected to come on down. So a bear here would sell rallies. So let's say it comes up, tests 80,000, it'd run into the moving averages, and then we'd probably drop it down to 60. So from 75 to 80 and then 80 to 60. Ouch. I didn't say I want that. That's just what it says. Meaning that's what the chart says. That's what it says technically. That's what it says statistically, and fundamentally it makes sense. Ethereum down, Sol down, Ripple down. Look at everything. We got Doge for you. Doge looking bearish. Binance down. Dot down. Where's my curve? So there's supposed to be a few other things in here. So everything kind of looks down. Now remember, these are 4-hour charts with a combination of weekly and monthly pivot points. And they're projecting low, man. Like based on what we've seen, the worst isn't over. Now you might argue this, and this isn't about being, I don't know, how do you say it? Like I suppose we could always argue, but you might say, well, we're near the monthly M2 and I want to buy this as a dip. You could, but because we're fundamentally and technically bearish, Aiden doesn't even draw the bullish pivots. It's not even a consideration. And you're like, well, I'm still a bull. Okay, great. And so we're running into a monthly M2, and that central pivot M2 area is a buy zone, and we're going to take it from M2, M4. Cool. I'm not saying you're wrong. I just can't prove any of what you are saying as being correct. Now, maybe you have alpha, you have some knowledge, which we don't pull fundamentally, and maybe you have a guess, a feeling. Maybe it's random. Okay. This is just technical, fundamental, and statistical analysis. It's a very, very, very accurate description of what is actually happening. But it's not going to predict the future and say, well, Doge is going to drop to 10 cents and then go to 20 cents. Well, maybe that does happen, but there's nothing no evidence for it that we can come up with. That wouldn't be an accurate description of what is happening right this second, what has been happening, and then the fundamentals behind. And part of the fundamentals is the correlation. And as you can see, apparently when Bitcoin falls, everything falls. So maybe you can't afford a Bitcoin, but you can afford a Dogecoin. The correlations are actually quite high. Okay. Let's take a look at our stock indices. Now, I'm taking my time. I'm tiptoeing through the tulips with you because you're my sweet baby. But some of the benefit or one of the major benefits of just going through these radars as part of your morning routine is you can just look at every stock market in the world and boom, now you see it. Okay. NASDAQ's actually set to fall. Dow is set to rise. DAX is set to fall. FTSE's set to fall, but technically isn't. And Nikkei is pretty bullish. So you can see, like, it's messy out there in the stock market. Okay, we're at 25K on NASI, and then look how flat the base is. Okay, the base projection is like zippity doodah, which means now there's a 50-50, statistically, there's a 50-50 chance of up versus down. Now, if we're fundamentally bearish, we're going to lean on the bear, not the bull. And you can see it looks like we might have kicked off the bearish sell zone. So far, Aiden would be correct. We're not using the moving averages. I think we're going to need a lower low, lower high to get the moving averages to cross over. So if you're using moving averages and MACD and those types of things inside your calculations, you're actually neutral. But that's what I mean, like 50-50 is neutral, right? But your alpha would be the general strategic plan for NASDAQ in the month of February is sell at M3, target M1. And we're on that projection right now to the green zone. And it looks like basically down to 24,000. Okay. So anywho, and then longer term positions and stuff, which is great because I'm already setting up sort of March. I'm very interested in 6 weeks from now. I'm so interested in 6 weeks from now. That is my prime thinking. Okay. So like in the next month or so, we're going to run into our projected annual high for Aussie versus US dollar. The conservative target for 2026. So like, just one little thought that popped my mind, right? Like, is TRADARS worth the money? Well, I'll ask you, do you have an annual target, a projected high or low for 55 assets for this year? And if your answer is no, then you don't have a strategic plan. You're just out at sea on a raft and you have no navigation. You're just floating around. Hope you don't die. Then the second thing is, once you have a strategic plan for the entire year for every asset class, everything, then you could overlap that with seasonality to try to predict when the peaks and valleys. are likely to occur. Is it early in the year or late in the year? Should you be taking profits soon? Or if you get to the projected high and it's still a bullish month or bullish quarter, then we're going to R3, baby. So it's hot and it's going to stay hot. Well, how do you know that if you don't understand what's normal or the actual? Remember, this is not a video game. There's actual reasons why money crosses borders. So you're like, well, Aussie dollar is smoking hot right now, and we're on the annual, R2. But if we got 7 or 8 more weeks of demand for Aussie just on normal commodities buying, oh my God, we're going to go to R3. Well, you would have to be able to do that. Now, Aiden can, but you need to use that so that you can do it. And then, now it's another layer. Then with that understanding, you can say, okay, well, I think we're going to go to R3 this year. And I think we're going to do it by June. So once you get into the May, June, July period, you can start watching capital flow changes in the commitment of traders report as looking for selling as people are drawing down their reserves of Aussie dollar because it's no longer needed because they bought everything they needed to buy from Australia. The season is over. Australia is shutting down for the winter. Demand diminishes, prices fall, but you should already know this, and this is why you took profit based on technicals, based on seasonality, and based on normal capital flow. That's how you make your decisions. Or you can use MACD. Yeah, hopefully you got more than that, Bubba. Hopefully you got more than that. Hang on,
BNB price.
He said he fixed this. Probably have to update. Let's see. He might not understand. Let me take a picture for it. Don't let it get away. Okay, it loads faster. Maybe because it's not doing any work. There's no prices, right? That's the issue. It knows the actual price, but it doesn't know on 3 time frames. And it looks like it has the prices. Yeah, you see that? All right, so this is what's happening. You see as I move, all the prices change. It knows the open, high, low, close for all these times. They're all individual candles. But he's not doing the calculation of the scalp trade, day trade, swing trade. He's got the data, but he's like, there's no standard deviation calculation. So he has slope, although I think that's BS slope. Yeah, that's just 45 degree angle. So he's not doing the calculations, but he has the data. So easy fix. Yes, Dennis, and I have gotten your messages. Thank you. Hang on. Hang on. My focus has been serving our current customers as a priority over bringing in new customers and making money. My focus has been serving. And so once I'm happy here, then I can go and fix that glitch so that you can actually sign up and pay. Yeah. I think that's good business. right? Like I'm up till midnight or 1 a.m. and then I'm up at 4 a.m., right? For our community. And once I'm happy with the functionality, which again, we just rebuilt the entire logic, not the way he thinks, but the way he organizes data to be, we're trying to get to 80% increase in efficiency, which means stellar, awesome. And then let me just check a couple other things. Okay. This will be updated in an hour or less from now. He's printing the wrong color, but I believe that the change is okay. But then that's off, and then it's not updating fast enough. Some of these things are, it's supposed to update every like 5 seconds, for example. Not just when you load the page, right? So that'll happen. That'll happen like today. Kind of thing. Well, Liam, I actually want you guys to run your own funds, and if you're any good, I want you to work for me. Like, there's so much money in the world, it's ridiculous. So there's two, there's two communities really. And I get to see both. There's a lot of decent traders out there in our world, but they don't have any money. And then there's people that have more money than God. And what they don't have is a good opportunity to invest it. And there's this huge disconnect. And a lot of it is actually quite cultural. And I don't mean like what country you're from, but let's break the world into two groups, because we're kind of there. You have poor people and you have rich people, right? And they're, just imagine they're from different planets, like Venus and Mars, like that kind of thing. And they don't interact. They don't understand each other. They may not even like each other. You're like, rich people are assholes and poor people are dirty scum. And like, there's no interaction. But what I mean, besides all of that, is there's quite a communication disconnect where the thought process between the two groups is very, very, very different. Like, let me give you an example. A lot of people aspire to having very fancy cars to flex that they're successful. Look, I got a $50,000 car. Look, I have a $100,000 car. Look, I have a $150,000 car. Look, I have a $200,000 car. I'm successful. You should love me. Okay, pretty people should laugh at all my jokes because I have this $200,000 car. Then you have someone that, without any thought at all, could buy 10 or 20 of those cars. So to that person, it's dumb. Not even dumb. It's nothing. It's just nothing. You're not flexing on, right? So another way of looking at it is there's people that want to travel. Then there's people like want to fly first class. And then there's people that want to get a jet card. And then there's people that want to get a private jet. But I was recently on a plane that a guy owned. It was his plane, but it was a 737. It wasn't a jet. It was a plane. like something Delta Airlines would fly. He had a media room. He had a bedroom. There was two showers, I think. The full kitchen, full living room. He had a boardroom, like a dining room table for like 12 people. Yeah, Boeing 737. So, like, what are you going to do to impress a guy that has $100 million jet plane? It's not even a jet. Like, a jet is just too small. You're like, well, there's no bedrooms. You can't have showers and a bedroom and a dining room table. You had a media room for watching movies, right? You're like, that just. So, like, what are you going to do to impress this guy? How about say something intelligent? Yeah. And so, like, it's weird. It's hard for someone like that then to communicate with someone that is from a completely different culture, is what I said. Where you're like, man, I'm a hustler. I'm going to work hard. I'm going to work day and night. And somebody that makes $1 billion a year doesn't even think that way, right? Working hard is what farmers do. But billionaires don't necessarily work hard, do they? They get their, you know, their $10,000 suits and their $100,000 watches dirty. You know, like, so there's just, I don't know how to explain it. So there's like a big disconnect. So wouldn't it be cool if we could just bridge that? Yeah. And I do know someone that is hiring retail Forex traders to be on his team and get you connected with, I'd say, like medium-sized asset managers that are looking for sort of a non-correlated asset class with someone that has a few years of trading track record, that kind of stuff, but not on scale yet. Right? Cool. But I think using TRADARS as a small, yeah, 1,000%. All right, so it's using today's price versus today's price. Okay. Today's price started at 0 apparently, right? But so I'll fix this. But here's the thing. The idea is that with TRADARS, especially when it's working 100%, right, is the same amount of resources that a $1 billion hedge fund would have, because they hire quantitative analysts, fundamental analysts, economists, technical analysts to gather research and reports and ideas to feed to a staff of traders on the trading desk. So if you're on the trading desk, you know, you want to know what to trade and why, technically, fundamentally, all that kind of stuff. And you need ideas from your team. And so you have all these people. So you got a staff. And with $1 billion, you're trading a lot of different assets with a lot of different strategies. So you have a very big staff. Well, what about you if you're trading, let's say, 100 grand, you're trading out of your kitchen. It's serious money. And you'd like that kind of data, but you can't afford a team of economists and quants. Well, that's what Aiden is. And then for an extra $100, you can add the coaching staff. So now you have a staff. Yeah. 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 So the idea is that you will be able to compete. You see what I mean? Let's see if we can reload this. So that's the real benefit. If you want to get big, and not necessarily just money-wise, but just your ability to be a professional. To me, that's big. You know how to gather intelligence, formulate a strategy, and execute the strategy, and manage the risk along the way. And remove luck out of it as much as possible, remove risk out of it as much as possible, and you're a steady producer, right? So I have a board meeting coming up for one of my charitable boards. I made more money from them in the portfolio I constructed or advised them to construct in the last 4 months than they made all year. That's an important thing. So now I'm going to hear all the directors like, well, we ran this program and this made this much money. And we ran this program and raised this much. Oh, and we got this amount of donations and we got this amount of new members. And all of this is added up to, this pile of cash. And then I'm like, yeah, well, I managed your money and made more than that. So there you go. To me, it's real. Like it's a real tangible thing. It's a real responsibility. And so TRADARS isn't about just being a data dump of stuff. It helps me with my responsibilities as a trader and as an investor. And, it is elite decisions that are being made at the highest level. Right? I've fired senior officers of huge Wall Street firms because they're not good enough. And now I'm about to fire another one, I think. I'll have to get board approval, but I'm like, the big Wall Street firm for this one charitable organization that I advise, they decided to build like Wayne's portfolio and the other advisors' portfolio. They lost 4%. I'm up 6% for the quarter. That's a 10% delta. 10% in a quarter. Is that important to a nonprofit? Yeah. Is that important to your grandma living on her life savings? Yeah. Is it important for you to be able to grow your assets as a person so that you can afford your first home for your family, and then you can afford to send your children to college? You're able to retire at a reasonable age and not be 75 still working at Starbucks so you can get day old muffins for free. Like these are real things. And so TRADARS is very important to me. It's not like a cool toy. It's not like a business I can sell to YouTube people. This is me. I recognize it. I use it. I spend 20 hours a day on traders.com. And I laugh because it's true. It's important. It's real. It's not a good to have, it's a must to have. And now I need to democratize it and make it available to everyone that follows my vision of, just because you're fairly new or fairly young or you don't have a lot of money, it doesn't mean you should trade at handicapped. That there's this community of super well-informed, super funded elite traders with Ivy League educations and $1 billion and a whole team, and it's you trading out of your home office with 12 grand in the account. why should you be at a disadvantage to them? Oh, well, they're Ivy League. So they have $1 billion. So they have an entire staff. So what? You have all the same now. You want Ivy League degree? I have, well, 2 plus Oxford and MIT on top of that. Like, why don't you just hire me to work for you? Oh, well, done. Problem solved. Now you got that solved. Like, there's like no advantage now to have a big team and a big staff and need billions of dollars. And, now it's just, you can do this. You have everything that's necessary to act as if you're a large firm with lots of resources and an amazing elite team. You get all of that for $200 a month, right? So you're like, now it's just whether you're serious about actually doing it. Do you show up? Do you ask good questions? Do you think? Or are you waiting for an alert service?
Pound US dollar stalls below 1.3700 as markets await Bank of England rate decision.
Resilient traders in uncertain times. North American midweek market update.
EIA weekly crude oil inventories 3455K versus plus 489K expected. United States EIA crude oil stocks change below forecasts. 2M in January.
Yeah,
30th.
2 million drawdown.
Actual 3.455 May. Silver rebounds on geopolitical risks, accommodative Fed policy expectations.
Sique, Riksbank remains vigilant amid economic growth. Commerzbank. BNB price forecast. BNB sell-off intensifies as developers launch new token standard for AI-driven assets. Chinese yuan strength is important for broader market, Beaufait Securities. Cool. So that just happened. We call this Forex.Today. We use TRADARS.com and Traders Way. Traders Way is an ethical, trustworthy foreign exchange brokerage firm. And I will be very shortly relaunching a program where, let's say you go and you sign up for one of our premium. So TRADARS is free. It's a freemium, so you can upgrade. The idea is if you put some money into a trading account with our execution partners, Traders Way being for non-US clients, and you meet some basic trading volume targets, like you actually use the account. You can't just put money in there and sit on it. But if you put money in there and use it to trade, and you'll earn rebates back so that TRADARS could be cheaper for free. Some people here get enough rebates so that it's free for them. They don't pay anything. So I will bring that back very soon, maybe March 1st. So if you actually trade, cool. Trade through us, and TRADARS could be cheaper free. Maximum live coaching. That's the democratization. If it's cheaper free, hopefully everybody uses it. Already built it, you might as well use it. Right? I'm already here. You might as well ask me some questions. That's what it's all about. But now, Aiden is amazing, where I do look at these charts and go, yeah, that's exactly what I think. It's wild. I have successfully taught artificial intelligence how I think and make decisions around trading. I have cloned myself, and it's bonkers. It's bonkers. So you can have me work 24 hours a day, 7 days a week as a brain in a jar, or you can invite me over for dinner. Cool. So anyways, I got some work to do. Got to fix all that up. But I love you, man. Love you, man. I wish you nothing but success, and I want to help you along the way. Let's work on your success together. Focus right now is to iron out the wrinkles on the new, I don't know what to call it, efficiency model that we've done. So again, he uses 80% less compute because we've maxed out our compute from the data center. Yeah, I need some NVIDIA Blackwells. I mean, seriously, what we're doing requires that. So it forced me to go back and rebuild so that it's more efficient in solving problems. We've done that. Created some wrinkles. I'll fix that. Second priority is I'm still having trouble with the coaching side of the platform to get the other coaches in. It's an authentication problem. I've rebuilt it. Still doesn't work. Rebuilt it again. Still doesn't work. So he's made mistakes somewhere where he's rebuilding one thing but not actually solving the problem. So the problem is somewhere else. And whatever, AI is not that smart. But I'll keep grinding at it until we get it fixed. Third priority is to get the sign up forms for new members so that you can sign up and get going. And then the next one, you can trade through our execution partners and potentially get TRADARS for free. Asset cards are pretty much done. Yeah. But I'll be honest, I haven't looked at them in about a week now. But they're pretty much done. Yeah. So that's probably, Jim, somewhere in there is probably an afternoon where I sit down with a pot of coffee and a big cigar. And by the time the coffee's empty and the cigar is gone, it'll be fixed. So I have 100% confidence in that. Like, cool. Yeah, that is on the way and is amazing. Especially, see, I think actually, sorry to babble so much, but I think that might have been one of the things that broke essentially the data center, right? We ran out of compute because what I built for that calculation in the asset cards in the summary was the newest version was pretty, like, you could almost call it a neural network because it was doing such wacky complicated math in the relational mathematics side, because Aiden is built on relational mathematic large language model, not ChatGPT, no. And so I pushed it to the limits. And I'm like, well, how fast does this Ferrari go? And turns out you need tires that can go 200 miles an hour. Yeah. And you're like, yeah, don't put cheap tires on your Ferrari and decide to go 200 miles an hour. Guess what? Your cheap tires, they're going to melt and they're going to explode and you're going to die in your Ferrari. So anyways, we've kind of hit that. So that's why I've had to rebuild everything so that we can do more and more and more and more and more complicated relational mathematics so that we can start uncovering trends inside the data that a human wouldn't be able to articulate. Yeah, Liam. Well, actually, they're building data centers all around me, actually. But I don't know what it is. It's just there's not enough compute. So I'm one out of a million AI businesses that are all demanding compute to the maximum. and the data centers, okay, are just not handling it. There's just not enough. The world is changing so fast. But the thing is, you have to decide, if the world is changing that fast, are you going to be left behind? Are you going to trade like you traded 5 years ago? Dude, the world has changed in 5 years. It's not like 5 years ago. People are making better decisions more quickly. And that's where TRADARS puts you at the top of the list of who can make better decisions faster and more quickly. Peace on earth. May the pips be with you. May your profits be above average. Have the best day ever.